For the Chapter 6 Tax Return Review, we'll be completing Comprehensive Problem 6-1A from the assignments. It's a really long problem, so we're not going to look at all the forms in detail, only the forms that you'll have to complete for your Chapter 6 tax return exam. In this problem, we have married taxpayers Richard McCarthy and Christine McCarthy. They're both under age 65. They have two dependents. One is a 19-year-old son who's a full-time student, and the other child is a daughter, Justine, who is 12 years old. Richard is a CEO at a paper company, so he's got a W-2 where we'll get his earned income. Christine operates her own optometry practice, so we're going to be completing Schedule C to report her income and expenses given here in the instructions. And in addition, we're going to be completing Schedule SE to report her self-employment taxes. She also had some tip income, so we need to explore that a little bit and see if her tips are eligible for the special deductions reported on Schedule 1A, and we'll look at that a little bit later. During the year, she made some prepaid rent payments, and she also had some unearned revenue that we'll need to make sure we properly report. Christine will be eligible for the qualified business income deduction, so we need to complete Form 8995 to get that deduction. We're further told that the McCarthys have a housekeeper to which they paid $18,600. The rule is if a taxpayer pays a household employee $2,700 or more, those payments are subject to employment taxes like Social Security, Medicare, and federal unemployment taxes. We're going to have to complete the Schedule H to calculate the McCarthy's nanny tax. Christine's uncle passed away and left her some money in a foreign account. She will not have to pay any taxes on this income, but she's going to have to report that she's got a foreign bank account because that's where the money was left, and she's going to have to do that on Form 8938, so we'll be also completing that form. Richard has student loan interest and received a 1098E. That's a potential AGI deduction, but there's an income phase out between $170,000 and $200,000 for joint filers, which means if their income is over $200,000, they're not going to be able to get that student loan deduction. So since the McCarthys, I know his earned income is like $240,000, so I don't think they're going to be taking this $3,020 deduction for the student loan interest. We're told that the couple got a 1099-G that reported $477 in state income tax refunds, which may or may not have to be taken back into income. We'll just take a closer look at that when the time comes. Christine redeemed a Series EE savings bond, so we're going to have to report the interest earned on that bond, and we'll come back to that when we start with the 1040. And we're given a list of potential itemized deductions that's going to help us complete the Schedule A. And in addition to all the forms we've already mentioned, we're going to have to fill out Form 8959. High-income taxpayers like the McCarthys have to pay an additional Medicare tax on any earnings over $250,000. Another tax that they're probably going to have to pay is the net investment income tax. So high earners have to pay an additional 3.8% on their investment income if their income exceeds a certain amount. And we'll have to complete Form 8960 for that. So this is going to be a really long return. So let's go ahead and get started on our 1040. As always, we're going to enter the taxpayer's name at the top, and we've got Richard listed first with his social, and then we've got Christine listed with her social. We've got their current address, and we're indicating that they've lived here in the U.S. for more than half the year. They don't have any digital assets, and they're also going to file married filing jointly. They've got 2 dependents, Jack and Justine. Both lived with the couple for more than half a year, and they resided in the U.S. So we have both boxes clicked under both Jack and Justine. And notice we have their social security number included there. The IRS checks to make sure that no dependent is claimed by more than one person. Under Jack, we have indicated that he's a full-time student because he is 17 or over, and so he will qualify for the credit for other dependents. Justine, she was under 17, so she will get the full $2,200 child tax credit. So let's start by examining Richard's W-2. He has wages, tips, and other compensation of $240,000. So we know that's going on line 1A. There is no additional earned income, so we're going to bring his earned income on down to line 1Z. Line 2 reports interest income, and we know that Christine had a 1099. We were given the information in the instructions. She had interest income of $23,200, and it says the note that the McCarthy's allocated $866 to state income tax expenses for the purpose of the net investment income tax. So when we complete our $89.60 reporting the net investment income tax, we'll come back and pick up that $866. But for now, we're going to enter $23,200 plus the interest earned on this Series EE savings bond. Now, she paid $5,000 for this bond, and interest was added to this bond, and she redeemed it for $10,000. So if she paid $5,000 for the bond and redeemed it for $10,000, her interest income was $5,000. So the $5,000 interest added to the $5,000 bond is the $10,000 redemption price. So we'll take the $5,000 interest earnings and add it to the $23,200 interest here from the 1099. We're going to report that here on 2B. So that's going to be $28,200. Now, since the total earned interest was over $1,500, we're going to have to complete the Schedule B, which I've already completed all that. I've put both their names on the Schedule B with the main taxpayer Richard's Social Security number. I'm reporting the $23,200 from the Bank of Scranton and the $5,000 from the EE savings bonds. And at the bottom, when we're asked about foreign bank accounts, we're going to have to click yes on 7A. We're going to click yes that she filled out the FinCEN. And then on 8, we're going to click no that she had no distributions. The next order of business is to work on Christina's self-employment income using the Schedule C. We have Christina's name and her Social Security number. We have to enter on line A the profession or business, and we've put optometrist. The instruction booklet for Schedule C will provide a code for optometry, and we're given that code in our instructions. That's the 62320. The name of her business is The Eyes of March, and we've listed the business address, and we're told that she uses the cash method of accounting. She did materially participate in the business. It was not started in 2025, so we don't need to check here. It says that she did make payments in 2025 that would require her to file a Form 1099, and so we clicked yes, and we clicked yes that we did file the 1099s. Now we need to go back and look at the income information that we were given for her. Okay, here in the instructions, I think they're up here. It says that she's got gross sales of $292,200 and returns of $7,500. The instructions say that Christina received $20,000 in advance for glasses that she would deliver in 2026. Since she received the income in 2025, she's going to have to report it in 2025, even though she won't earn it until 2026. She's a cash basis taxpayer, and she has to report income in the year it's received. Now, we're not going to have to adjust the figure we're given because that figure already includes the $20,000. So when we go over to her Schedule C, we're going to report the $292,200 in sales and the $7,500 in returns. So on line 1, we'll enter the $292,200 and then the returns of $7,500. When we subtract the returns from the gross sales, we'll get $284,700, and that represents her net sales. The next line is for the cost of goods sold, and line 4 says that is from line 42. So we're going to have to go all the way over to part 3 to calculate the cost of goods sold. We'll mark that she uses the cost method and that there was no change in determining quantities or costs. And we'll need to go back over to the assignment to find the inventory figures. If you haven't taken Accounting 1100, you may not know that beginning inventory plus purchases minus the ending inventory will give you the cost of goods sold. So here are the figures that we're going to transfer over to part 3 of the Schedule C. She started the year with $25,000 in beginning inventory, and she purchased additional inventory during the year of $122,000. So at the end of the year, she only had $32,000 left. So the difference between the $32,000 and what she started with and purchased will give us the cost of goods sold. So let's get that entered over on Schedule C. Beginning inventory, we were told, was $25,000. And then she added $122,000 by purchasing more inventory. Notice that we are not entering anything on the line for the cost of labor, materials and supplies, or other cost. She didn't make her inventory, she just purchased it. So we're not going to have anything on these lines, on this return, or any of your exam returns. Now when we add lines 35 through 39, that gives us $147,000, and that figure is called the goods available for sale. That's everything that she had to sell to her customers. At the end of the year, we're told she still has $32,000. So if she had $147,000 in inventory, and she still has 32,000. That means she sold 115,000 of her inventory. So we're going to take this back up to line 4 as her cost of goods sold. To get the gross profit, we're going to subtract line 4, the 115,000, from line 3, and that would be 169,700. That's her gross profit. She has no other income, so we'll bring that on down to line 7. The next section is for her business expenses. So we can go back over to the instructions and we'll see a list of the expenses that were given for her. We do have some additional information down here about the rent. It says that Christine paid her rent for 2025 month to month, but paid $20,000 in December for all of 2026. Taxpayers have to report their expenses on the cash basis, meaning that she reports her expenses when they're paid. Even though the $20,000 that she paid in December was for all of 2026, it was paid in 2025. So that $20,000 is going to be deducted in 2025 with all of her 2025 rent payments, even though it was for 2026. So the figure we're given includes the $20,000 for the 2026 rent. So we're going to enter the entire $40,000 as rent expense in 2025. So let's get back over to our form. Let's see, the depreciation figure we were given was $3,800. Insurance was $11,000. Legal and professional was $3,300. The office expenses were $21,000. We're going to put the $40,000 in rent, but it wasn't for vehicles, machinery, and equipment. It was for other business property. It was for her office front, so that would be $40,000 there. $3,500 for taxes and licenses. That was her payroll taxes. Utilities were $4,000, and wages paid were $42,000. So now when we add up our total expenses, we're going to get $109,700. If we subtract our total expenses from the gross profit, the tentative profit or loss is going to be $60,000. There were no expenses for the business use of her home, so her net profit is going to be $60,000. Line 31 says if it's a profit, enter on Schedule 1, Line 3, and this is going to later flow over as income to the 1040. It also says to enter it on Schedule SE, Line 2, where we're going to calculate her self-employment taxes. So first, let's go over to the Schedule 1, and we'll come down and enter the business income or loss here on Line 3. Now we'll come over to the Schedule SE, and we're going to enter the income from Schedule C on Line 2. So here's where we'll put the $60,000. We don't have anything on 1A or 1B. That's about disability benefits and farm profit. So we're just going to get started on Line 2, and we're going to bring that on down to Line 3. We're told to multiply Line 3, the $60,000, by 92.35%. And when we do that, we get 55,410. So instead of having to pay self-employment on the full 60,000, we're only going to pay it on the 55,410. So that's a small break we're going to get on the self-employment tax. Now we're going to bring the 55,410 down to line 4C, because that's the next one that applies. We're just really bringing the figure down, and then down again to line 6. Notice line 7 here, it's giving us the maximum amount of wages that apply to Social Security. So the form has the 176,100 Social Security earnings limit for 2025 for us, because remember, taxpayers do not pay Social Security on earnings above 176,100. 8A through C do not apply to us. So the 176,100 is going to come on down to line 9. Line 10 says to multiply the smaller of line 6, which is our earnings, or line 9 by 12.4%. And when we do that, we're getting our Social Security tax of $68.71. That is the employee portion of Social Security and the employer portion of Social Security. Now on line 11, it says multiply line 6 by 2.9%. That's going to get us our Medicare tax of $16.07. That's the employee and the employer portion. And so when we add lines 10 and 11, we'll get total self-employment tax of $84.78. Line 13 says to take half of line 12. And so when we take 50% of $84.78, we get the $42.39. This represents the employer side of the self-employment tax. And just like all business-related employer taxes, it's deductible as a business expense. So we're going to take the figures that we've calculated here, and then we're going to move them over to where they tell us to move them. It says for the self-employment tax, enter on Schedule 2, line 4. So on Schedule 2, we'll scroll down to line 4 and enter the $84.78 in self-employment tax. Now the Schedule 2 is for all additional taxes owed. So now let's go back over to the SE and take a look at line 13, the deduction from 1/2 of the self-employment tax. It says to take this figure over to Schedule 1, line 15. So if we go over to our Schedule 1, we'll go down to Part 2, where the adjustments to income are located, and then on line 15, we'll enter the 4239 from the Schedule SE. That's going to be our only AGI deduction, so we're just going to go ahead and bring that 4239 down to line 26. And then on Part 1, we only have the business income as our additional income, so we'll move that down to line 10. Let's go ahead and move these figures over to our Form 1040. For the additional income, we're going to move that to line 8. Okay, that was $60,000. And then for the adjustment to income, we're going to move that to the 1040 line 10. Before we total up, there is one more income item that we need to address, and that was the $477 in state income taxes that were refunded and reported on Form 1099-G. In 2024, the McCarthys filed a Schedule A. In other words, they itemized their deductions and they took state income taxes of $14,223. Even though they itemized their state taxes in 2024, they didn't really get a tax benefit of the full $14,223 because that deduction was limited to $10,000. Only a maximum of $10,000 could be deducted for state income tax. So this means $4,223,000 of state taxes they paid didn't reduce their taxable income, and that included that $477 that they received as a state income tax refund. So we do not have to add this $477 back to our income on Schedule 1. Now that we have all the figures on page 1 of the 1040, we can enter the totals. First, we're going to calculate total income, and that's line 1Z to 8. So the 240, the 28.2, and the 60,000, if added together, we get 328,200. Now we can subtract our adjustments to income from the Schedule 1 and get the adjusted gross income. So the 328,200 less the 4239 gives us adjusted gross income of $323,961. So we're going to carry that figure on over to page 2. Next is line 12, where we will either enter the standard deduction or the itemized deduction. But first you have to possibly check some boxes. On 12A, it's asking if the taxpayers are a dependent of anyone else, so we can skip 12A. 12B asks if the other spouse itemizes on a separate return, and no, because we're filing jointly here. And then on C, where you're a dual status alien, that doesn't apply. And then D, were you born before 1961 or are you blind? So that doesn't apply either. So we can focus on the standard deduction for married filing jointly of $31,500 or the itemized deductions. Itemized deductions are listed on Schedule A. So we've got the top filled out with the name and social of the taxpayers. There were no medical and dental expenses reported by the McCarthys, so we can skip Section 1. If you do have medical and dental expenses, remember that the total expense that you can deduct is limited to the amount over 7.5% of your adjusted gross income, so make sure you fill out that section if needed on your exam. The next section is for state and local taxes. Now we do know that in the instructions it says that the McCarthys paid estimated state income taxes of $2,500. And also remember that one of them had a W-2, was Richard, and on Richard's W-2 it reports the amount of state income taxes withheld. So they paid in this $15,900 to the state, as well as those $2,500 additional estimated tax payments that they paid in. So when we add the 2,500 and the 15,900, we get 18,400. So that will go on line 5A of Schedule A. Line 5B is asking for state and local real estate taxes. So we'll go back to the instructions. And it says that property taxes were paid of $5,800. So on 5B, we'll enter the $5,800. That's all the taxes that will be reported. So the total is $24,200. And on line 5E, it says enter the smaller of 5D or 40,000, 20,000 if married filing separately. So we're going to enter the 24,200. So the maximum deduction has gone up by 30,000. Remember last year it was 10,000. So state taxes of up to 40,000 may be deducted. So 5E will be the lower of 40 or 24.2, which will be the 24.2. And then we're just going to bring that down to line 7. The next section is for home mortgage interest, and we will report the home mortgage interest and points reported on Form 1098. In our instructions, it says the interest reported on Form 1098 is $17,700. So on 8A, we'll enter the $17,700. Okay, that'll be all of the interest that they paid. So we'll bring the total down to 8E, and then again on line 10. We have the charitable contributions section, and I do remember some contributions. Charitable contributions were $4,300. Okay, and we'll move those down to line 14. That's all that will be reported. So that's all of our itemized deductions. So if we add the 24.2, the 17.7, and the 4,300, we're going to get a grand total itemized deductions of 46,200. We want to bring the 46,200 back over to our 1040, and we'll enter the 46,200 on line 12E. Notice that the itemized deductions are substantially larger than the married filing jointly standard deduction. So we're going to take the higher of the two, which is the itemized deductions. The next line is 13A for the qualified business income deduction. Since Christine is a business owner, she's eligible for this deduction. The qualified business deduction is a tax break that lets certain business owners deduct up to 20% of their business income on their personal tax return. So that's going to take us over to Form 8995. To save us some time, I've already completed the form. The taxpayer information is at the top, and on line 1 we've entered the trade or business name, which is the I's of March, the taxpayer ID number we were given, and then the qualified business income. Now, this qualified business income is her Schedule C income less her self-employment tax deductions. So if we go back to Schedule 1, we can see both of those. We completed Schedule C and got net income of $60,000, and then we completed Schedule SE and took 1/2 of her self-employment income as a deduction. So if we take the $42.39 from the $60,000, we'll get $55,761 as her qualified business income. She only has one business, so we're going to bring that figure down to line 2. There is no carryover, so we'll bring that on down to line 4. And then it tells us on line 5 to multiply line 4 by 20%. So that's $11,152. That's going to be her tentative deduction. Line 6 is about real estate investment trust, so we don't need to concern ourselves with 6 or 7 or even 8. So we're going to come down to line 10 and enter our potential deduction. It said add lines 5 and 9, and we had nothing on 9. Line 11 wants us to enter the taxable income before the qualified business income deduction. So we can go back to our 1040 and take the adjusted gross income of $323,961, subtract the itemized deductions of $46,200, and we get $277,761. Okay, we've entered that here on line 11, and we're going to just bring that down. There were no net capital gains. We'll bring that down to line 13. And then on line 14, we're going to multiply line 13 by 20%, because this deduction, the qualified business income deduction, cannot exceed 20% of the taxable income. So that comes out to $55,552. So we're going to choose on line 15 the lower of line 10 or line 14. And that's the $11,152. So now we can bring this over to, I think, line 13 on the 1040. That's $11,152. Line 13B is for additional deductions from Schedule 1A. Remember, those are the special additional deductions for taxpayers that were added this year. We were told in the instructions that Christine had tip income because her customers were so pleased with her services. So we'll come over to Schedule 1A and enter the taxpayer information at the top, and then we're going to enter the adjusted gross income on line 11B, which was the $323,961. We'll enter that on 1 and then bring it down to line 3. So let's look at the instructions and see what it says about the tips. Also included in Christine's gross sales figures are cash tips of $1,400 that Christine would occasionally receive from her customers that were pleased with their services. Now, the rules on no taxes on tips is that the profession has to be a profession where tipping is customary. Christine is an optometrist, which means she has a health occupation. So it is not customary to tip your healthcare providers. And actually, specific health occupations like doctors, dentists, therapists, etc., are excluded from getting this deduction. So we'll go back over to our Schedule A1, and we're just going to put 0 on line 5 because she has no qualified tips that she can report. So we're just going to fill out this form. We typically would not fill it out, but it's provided in the problem, so we need to put something in there so that you will not be deducted points. Back on the 1040, we'll put 0 as our additional deductions, and now we're to add lines 12E, 13A, and 13B. And so when we add those, we get 57,352 as our total deduction. And we're going to subtract that figure from 11B, our adjusted gross income, and we'll come up with taxable income of 266,609. Since our income exceeds 100,000, we can't go to the tax tables. We're going to have to go to the tax schedules, which are provided in this problem. The first table in the schedules is for single filers. The second table, Schedule Y1, is for married filing jointly filers. So we know that our taxable income is 266,609, and we're going to find the range that this taxable income falls within. So it is within the 206,700 and the 394,600. The schedule says that the tax is 35,302 plus 24% of the amount over 206,700. So they have given us the tax on the 206,700. We have now got to calculate the tax on the taxable income that exceeded 206,700. So I am going to take the taxable income and subtract the 206,700 to get the excess, which is 59,909. Going to multiply that times 24% to get the tax on this excess is 59,909, and the tax on it is 14,378. They've given us the tax already on the 206,700. That's 35,302. So when we add that to the tax on the excess, our total tax is 49,680. So we'll come over and enter 49,680. So now we'll look at some additional taxes that the McCarthys are going to owe. Remember, they had a nanny housekeeper, and they paid that person $18,600 during the year. They did not withhold Social Security or Medicare, which is FICA taxes on that employee, and they paid the Pennsylvania state unemployment tax of $386 on that employee. So since they have a household employee who earned over $2,800 in 2025, they have got to complete Schedule H. Okay, so I have entered the taxpayer information and then Richard's Social Security number. Question A says, did you pay any one household employee cash wages of $2,800 or more in 2025? And the answer is yes. And our instructions are to skip B and C and go to line 1. The wages that were paid to that employee were $18,600. We're going to multiply that times 12.4. That's 6.2 in employee taxes and 6.2 in employer taxes. So Social Security is $2,306 on that employee. Medicare taxes are going to be 1.45% for employee and 1.45 for the employer, which is a total of 2.9. We're going to take 2.9% times the 18.6, and the Medicare taxes are $539. When we add the Social Security and Medicare, the total FICA comes out to $2,845. Then on question 9, it says, did you pay total cash wages of $1,000 or more in any calendar quarter of 24-25 to all household employees? And that's answer is yes. So we're going to go down to line 10. We've got some more questions here. Did you pay unemployment contributions to one state? Yes, the state of Pennsylvania. Did you pay all unemployment contributions on time by April 15th? Yes. And were all wages that were subject to FUTA also subject to your state's unemployment tax? And we'll put yes. So the state where the unemployment was paid was Pennsylvania, and this is just information from the problem. The contributions, we were told, was that we paid in $386. The total cash wages subject to federal unemployment tax is $7,000. That's the maximum per any employee. So when you complete this on your exam, make sure on line 15 you enter $7,000. So the full $18,000 is not taxed, just the $7,000. So $7,000 times 0.6%, which is 0.006, is 42. So that's the unemployment tax on this household employee. So down on line 25, we're going to enter the amount from line 8, and that was just the FICA taxes of $28.45. And then we're going to add the $28.45 with the unemployment tax of $42. So the total additional taxes are $2,887. Are you required to file Form 1040? Yes. So now we're going to take this $28.87 over to Schedule 2, line 9. Okay, so line 9, we're going to enter the $28.87. Another tax we're going to calculate is the additional Medicare tax. This tax is sometimes owed by high earners, those earning over $250,000, and the Form 8959 has to be filled out to calculate this tax. I have the taxpayer's name at the top, and we're going to start with Part 1, where we're reporting additional Medicare tax on Medicare wages. So this is reporting wages, and we're going to have to go to the W-2 to get our information. And line 1 says Medicare wages and tips from Form W-2, Box 5. So we'll move over and see that our Medicare wages and tips is $263.5. Now this tax was created several years back to help pay for the Affordable Care Act. So we've entered the $263.5. We're just going to bring that down to line 4 because lines 2 and 3 do not apply. On line 5 it says enter the following amount for your filing status. We're married filing jointly, so we're going to enter $250, and we're going to subtract line 5 from line 4 and enter the difference on line 6. That's $13.5. We have exceeded the additional Medicare threshold of $250,000 by $13,500 on the $13.5 at 0.9%. So we're going to multiply the $13.5 times 0.9, and we're going to get additional Medicare of $122. Part 2 is on self-employment income. So we're going to have to go over to Schedule E and go to, or Schedule SE and go to line 6. Okay, line 6 on the SE is $55,410 in self-employment income. So we'll enter the 55,410 there. We're going to once again on line 9 enter our additional Medicare threshold of $250,000. Line 10 says enter the amount from line 4, so we've got the $263,500 here. And then line 11 says subtract 10 from 9. Now line 10 is bigger than line 9, and if we subtract it, we'll get a negative number. So line 11 says if 0 or less, enter 0, and then we're going to subtract line 11 from line 8, and we'll still have the 55,410. And the additional Medicare tax on this amount will be the 55,410 times the 0.9% to give us $499. So if we scroll down, we're going to enter our total additional Medicare on line 18. So it's the $122 and the $499 to give us $621. Line 18 tells us that we also need to include this amount on Schedule 2, line 11. So if we go to Schedule 2, line 11, we're going to enter the $621. Now we'll move on to the withholding reconciliation. In this section, we're going to compare what the employer actually withheld from his W-2 and Medicare taxes, and then calculate what is actually owed in regular Medicare to see how much additional Medicare the employer withheld, because the employers are required to withhold additional Medicare on high earners. So let's go over to Richard's W-2 and look at box 6. Medicare tax withheld was $4,392. So 4,392 is the amount that he has already paid in. And we're going to now enter the amount from line 1, and that's just his Medicare wages from the top, the $263,500. And we're going to multiply that times 1.45%. That's the rate of regular Medicare tax. So $38.21 was what he owed in regular Medicare. He paid in $43.92. That means the difference between the two, the $571, is the amount of additional Medicare tax that he paid in. So we'll just bring that down to line 24. And it says we also need to include this amount on Form 1040, line 25C. So 25C, we'll enter 571 as other federal income tax withheld. And we have one more form to fill out to calculate another tax that's owed by the couple, and that's Form 8960 on net investment income tax. The net investment income tax was added to high earners once again to help pay for the Affordable Care Act. So it is an additional tax on investment income. So on part 1, line 1, we're going to find our taxable interest. So we can find that from the 1040. If we go up, we have interest that's taxable of $28,200. So that's where that figure came from. That is all of their investment income. So we're just going to bring that down to line 8. In part 2, we're going to enter any investment expenses that went against this income. So we were given something in the instructions. It says that the McCarthys allocated $866 to state income tax expense for the net investment income tax. So they've already paid in this $866 in state taxes on their net investment income. Okay, so we put the $866 for state and local income taxes on 9B, carried that down to 9D, and then down to line 11. Line 12 says to subtract line 11 from line 8. So when we subtract the investment expenses from the investment income, we get $27,334. Line 13 wants the couple's modified adjusted gross income, so that's really just all the income that the couple has, either taxed or non-taxed. So they only have the $323,961 as their adjusted gross income. So we're going to bring that over to line 13. Now for the net investment income for married individuals, the threshold is $250,000. So if you earn over $250,000, then you will be subject to the net investment income tax. So it says to subtract the $250,000 from the modified adjusted gross income to get $73,961. And on 16, it says to enter the smaller of line 12 or line 15. So the smaller is, of course, line 12. You're going to be taxed on the smaller of the amount you went over the threshold or your net investment income. So their net investment income was lower than the amount they exceeded the threshold. So we're going to apply 3.8% to line 16. So their net investment income tax is $1,039. And it says enter here and include on your tax return. We are supposed to enter that on line 12 of Schedule 2. So we're going to enter the 1039 there. Now that we finally recorded all the additional taxes, we can bring the total down on Schedule 2 down to line 21. And the total is $13,025. And line 21 says to take it over to the 1040, line 23. So on line 23, we'll enter the $13,025. And so now we can get all our taxes added up. So we have on line 16 our income tax owed of $49,680. Line 17 says amount from Schedule 2, line 3. We did not have anything on line 3, so we'll just bring the $49,680 down to line 18. Line 19 is asking for the child tax credit or the credit for other dependents. We do have two dependents here. We have Jack, who is in school, so he will get the credit for other dependents of $500. And we have Justine, who is under 17, so she'll get the full child tax credit of $2,200. So the $2,200 plus the $500 is a credit of $2,700. Now normally we're going to have to fill out the Schedule 8812 for that, but we're going to wait until Chapter 8 to tackle the Schedule 8812. The amount from Schedule 3, line 8, we have nothing there, so we're going to bring our total credit down to line 21, and then we're going to subtract our credit from our tax liability, and we'll get our new tax liability after the credit of $46,980. We're going to have to add in this additional tax now and then get the total tax owed of $60,005. Now we've got to go back over to Richard's W-2 to find out the federal income tax withheld from the W-2. So that is going to be here. Let's see if we can find his W-2. Federal income tax withheld is $59,500. So when we add the total prepayments, that's going to be from the W-2, the income tax withheld, and the Medicare tax, the additional Medicare tax, we will get $60,071. Line 26 wants to know if any estimated tax payments were made and applied from the 2024 return. If we go back to the instructions, we'll see there were federal income tax prepayments made of $4,500. So on 26, we'll enter the $4,500. There were no additional credits or taxes to be added in, so the total prepayments is going to be $64,571. The tax liability was $60,005. The amount prepaid was $64,571. So they have overpaid their taxes by $4,566. So they are entitled to that refund.